President Trump, in his first term, increased tariffs on our allies as well as on our competitors, from China and so forth. And the Biden administration actually continued them. We just didn't really talk about it that much. Actually, one of the first pieces that I wrote on Prinsights, the first piece, in fact, was about the comparison of the expanded tariffs under the Biden administration that had been initiated by the Trump administration. Now we're in sort of cycle 3 of that, where we will get some form of tariffs from the Trump administration. The question is, what will they look like? And then to the second part of your question, how will they speed the impetus of other nations to trade away from the US dollar in order to protect their own economies and national interests? I don't think there's any way possible to have a 100% tariff on all BRICS nations or on all nations that don't trade exclusively in the dollar, because that's absolutely impossible to track. Even right now, there's a lot of product that we get, for example, from China that doesn't come from China. It goes through Malaysia to us and so forth. There's all sorts of supply chain links that are really impossible to tariff along the way. And if that were to ever occur, it would really be a dramatic pinch to our own economy, as well as to the economies of all the countries that we deal with, and therefore to our own economy. Will there be a rise in some tariffs, and to what extent there will be? You talked about raising tariffs on Canada, on Mexico, our nearest allies with whom we do a significant amount of trade. And in terms of the BRICS nations increasing tariffs on China, it's not quite clear what's going to happen with Brazil. Of course, Brazil is a country with a tremendous amount of natural resources, and increasingly, I think, will be prominent in the world for processing and for technology manufacturing, because it just has really cheap energy and it's just well positioned geographically. And I think that the Trump administration is going to have to do some thinking about those supply chains. And if we really do put those sorts of tariffs on, they're not just threats, the ones that actually come into play, how much money that brings into revenues for the United States and how much it costs the United States. In terms of revenues, tariffs so far, even with those 2 administration increases, only account for about 2% of the money that comes into the Treasury, of the money that we use to operate the U.S. budget. It's a very small amount. So, even if you increased everything by 100% and there was no change in trade flows at all, and everyone just sort of coughed it up at the bottom level, you're still only talking at the most 4% of revenues coming from tariffs, which is an impossibility anyway. But that would be the most you could get to. So I don't think any of that's going to happen. I think we're going to see some. I think more than that, we're going to see more anxiety and uncertainty and tariff wars that are going to produce an inflationary outcome for the products in which they're involved. Whether or not that's a one-to-one to the tariffs that are imposed, or it's simply a magnification of the expectations of what those tariffs could do. But oftentimes, and we've seen this in the last 2 administrations, when tariffs increase, the highest bump that happens in prices is really around the initial period, because it takes the anxiety of the costs, it takes the expectation of the costs, and it takes all the middle companies to increase their prices at that time in order to circumvent potential future costs. So a lot of what we'll feel and experience will be in the beginning of these policies, whatever they happen to be. And other countries don't want to deal with that. Other countries want to continue to diversify away from the dollar. We've seen a lot of that happen in terms of financial systems, trade agreements, dualities in currencies, swap lines between, for example, Russia and the People's Bank of China, the Russia Central Bank, and more of that's going to continue to increase as mechanisms for diversifying away from the dollar. First of all, these are things that take a very long time, many years, to come to any sort of fruition. There are movements along the way that are slow and sort of are transitioning, I think, right now. In terms of whether it's the units backed by gold or whether it's a collection of central bank digital currencies that can operate on a global payment system and settlement system, which are being developed. China has one that's being prototyped. Brazil has one that's being prototyped. There's a lot of conversations around the sort of edges of the last G20. I was in Rio last month. There's a lot of conversations around the edges about payment system, a settlement system that can really compete or be a major alternative to the SWIFT system, which is more US and Eurocentric. So it's good that you mentioned that, because a lot of people, I think, don't realize that if you don't have the payment system and the settlement system, you can't really transform a currency. It's not the reserve currency composition that changes at central banks. It's all these little pieces along the way. And those are being worked on. And what Roosevelt did is, as she came into her position at the New Development Bank on the wake of other people who had been in that position, the Brazil seat now, and she's the president, but all of the BRICS countries, the first 5, have sort of executive positions as part of the new development bank, and then one is the head, which she is right now. So they all have a sort of communication going about this in their different ways. And I think that gold, one of the reasons that the idea is for gold to come back into being some sort of a balance to what will probably be a digital currency of some sort, and as its central bank collection, or the use of multiple central bank digital currencies within one payment system when it comes to fruition, is having a component of gold there would require any central bank using the system potentially to have a reserve of gold that it can use to back the system or to back their currency component in the system. And that brings back a sort of quasi gold standard, I would think, initially for being able to use the system. To be participants, you have to have, perhaps a certain percentage of gold in your reserves. And for example, if we look at China, right now it has about 5% of its reserves in gold, which is low compared to Russia, which has sort of double digits of percentage. Poland has actually a high percentage of gold. But they're a long way to go in terms of where they could decrease the reserves that they have still in treasuries in the US dollar versus buying gold. But since 2018, since these tariffs kind of started initiating under the last Trump administration, they have dropped the amount of reserves that they have had from $1.3 trillion worth of US dollars of treasury bonds to about $750 billion. So almost in half. And at the same time, they've increased their gold amount, not by the same magnitude. They've diversified in other ways as well, but they've increased their gold amount to 5% from less than 2% of their reserves. And that's just movement. That's a pattern that's going to continue. And so then if you connect as those central banks, BRICS or BRICS Plus, or their allies, their trading partners, into this system, and all of them have to have a certain percentage of gold as a ticket to entry, which is what she's basically saying, and it is a way to diversify from any paper asset, certainly the dollar, then you can see them buying more gold and being a component that way. So there's a lot of steps along the way. The primary step is to actually get the technology of a system working that enables quick payments and quick settlements and secure messaging and crypto protection and all of the things that are the nitty-gritty of a massive global payment system as we evolve into that. A lot of these initiatives, they're years in the making, and they don't stop because of even a president who is, as I'd say, good at pushing his agenda forward, whether by executive order or deal making or whatever it might be, as Trump has been, and I'm sure will prove to be. And so I think that you can't just, even with that, stop this initiative to effectively gather global data. Now, like with the digital payment system we were just talking about, gathering global data in one place is a massive undertaking. And so the way to break that down is to consolidate data across, say, multinational companies that operate in sort of a global space, not everywhere in the world, but in a global manner, with governments who have an incentive and in often cases a policy to actually have what they consider to be national security driven data integrity. And the best place to think of that is just in terms of whether anybody has flown recently through certain airports, just the general changing of things from showing your passport and having a physical interaction with an agent and so forth, to just literally looking at a machine that takes your photo very quickly and it sort of pushes you through in and out of countries. It doesn't just push you through, it has all of your information. And right now that information might be limited to more obvious identification about us, our birth date, our location, our citizenship, name, etc. But once you have the technology, and it's generally either blockchain or Ethereum based, depending on what is contractual or data linked together, following you around, or following one around, or following itself around, or following data, all of that becomes easier to, sort of culminate into a larger digital ID. And from the standpoint of other policies that Trump and other administrations have, and people across the aisles of different countries, certainly the United States, are very focused on national security. It's the one thing that is used as a reason to do so many things in the United States, whether that is to aggregate data, whether that is to have an international or national ID, whether that is to just look at how bank accounts operate and sort of protect us from money laundering and fraud, but at the same time see the tracking of how our payments and where they're going and where they're coming from and so forth, just in general. All of that is connected to a national security broad banner. And hence it tends to be supported by, as I said, all members of Congress, and it tends to have a life longer than any presidential administration. It's interesting because all of this is in broad daylight. I mean, if you go, those reverse ATMs, I've seen them at baseball stadiums as well. And I think St. Louis, but I'm not entirely sure, but in the middle of the country, just throughout everywhere, right? And the idea of that is to facilitate that transfer. It would be very scary if a government or a central bank or any bank would say, hey, give us all your paper money that you have, or worse, we're just going to discount it completely unless you convert over to whatever our version of a digital currency is. And so it's done in all these stages. The United States actually is sort of behind in some of the digitization of currency, or going cashless relative to other countries. I'd spent time a summer ago in Scandinavia going through Norway, Sweden. These countries have literally no cash anywhere. And unless you have an app, and Sweden's one example, an app that is basically owned by the 5 largest banks in Sweden, unless you have that app, you basically can't buy anything. And even homeless people that have phones, as I had seen they do, have to have this app in order to facilitate getting money, and then they can go into a local store and they can get food. It's off of the phone. So it's happening more so in countries where the banks have been more actively involved with the central bank in terms of removing cash from society. There are a lot of signs saying that you can't use cash. I was just in Brazil, as I mentioned, for the G20, and there was a number of places I went into, just local small businesses. There was one place that was a lovely farm to table organic coffee, little tiny hole in the wall, and they're no cash, you have to use Pix, and Pix is central bank owned digital payment system in Brazil. It is used right now by 100 million people and growing. It's small, but they're making deals now with countries around the world. It's only been around since COVID. So, a lot of movements are happening. And the downside is that to the extent that they are using blockchain technology, which a lot of them are not yet. So there's this other integration that's happening on the other side of this. There's a payment system, there's a usage of digital and cashless, and then there's the blockchain component. And if and when that connects, then any of your data is really connected in one place. It does follow you around, and it's connected digitally. And this is where gold comes in. Unless you have gold or silver, or something that can use as an exchange value on the side, you're really not just attached to a cashless environment. But if anything goes down, if a satellite goes down, if your internet goes down, if your phone has no battery, if whatever, you don't have a means by which to buy things. That's very scary. And I'm not saying people are going to go around to gas stations with gold coins, but in the limit, if we don't have cash, there has to be something else that isn't technological as a backup. It's absolutely concerning. And also, right now, the IRS, the Treasury Department, has the ability to go into our bank accounts and take money out to pay for, outstanding taxes, to garnish wages at source, to anything they can sort of connect into. But it's really the bigger banks. There are willing and potentially necessary partners in this system. But if you have a more digital system, then a lot of that can just happen at source. And what that takes out is the ability of people to manage how and when they pay taxes as well.